traders, welcome to Dissect and Detect. It's 7th of February from a very gloomy and cold London. Right, last week, very interesting week. It did put a little bit of dampener on our trading results so far for the year. We had a mixed week, let's say. We started off very, very well, continuing with our January success, but then the big sell-off in the dollar thanks to Mr. Dudley, that's what we're putting it down to, making a couple of statements that then created a huge sell-off in the dollar. From that point on, we then had major news announcements throughout the rest of the week where we basically told all our clients and highlighted in our videos that it's probably a week to avoid trading with non-farm payrolls, etc. Then we got the results from non-farm payroll on Friday, which came out initially, the market would anticipate it as disappointing. They were expecting 190,000 new jobs to be created, and it came in at 151,000. Now, on face value, that would sound pretty disappointing, and to the inexperienced trader, it would. But then if we looked at the other news that came out, what came out was that unemployment has actually shrank from 5% to 4.9%, which was very, very good. And then the other very good factor about the economy for the US was that the hourly earnings had increased significantly. So what we have to think about is, yes, the jobs numbers are very important, but all these 200,000 plus creating new jobs every month, is that sustainable? Absolutely not, because if they're trying to create all these new jobs, they have to find people for them, so it's not sustainable. So looking back at these figures, it was very, very good for the US, and I think what will transpire will be on Wednesday when Janet Yellen makes her speech, which I believe this is going to be very, very important, and we should see either a kickstart, continuing dollar strength, or maybe a pullback, but I can't really see the decline now. We've got on the chart at the minute, we've got the dollar index, and we're showing this because when we were looking at the beginning of the week, the dollar index was somewhere here. Our analysis was pointing it up to the 100s, 100.5, the major resistance area here highlighted in red. So we were targeting looking at buying dollar on all pullbacks. Then we got the news from Mr. Dudley through here, and we got a huge sell-off. It came down to this area here. We took a few losing trades, by the way, through this day. 2 on euro, 1 on Canadian dollar, and did we take a hit on Swissy? No, we didn't take a hit on Swissy. It was banked at break even. We banked also our Swissy that was running long from 99.70 for an extra 100 and something pips. We had a good trade on CAD yen, the risk off trade. We banked 104 pips on that through this same day. But unfortunately, it did result in a 1.2% capital loss on equity. Plus, our overall open P&L, we did lose 1% of our open P&L as well. So in a day, that's quite a bit of capital to see retreat. Now, you always have to remember, and you'll probably get bored of me reiterating this, you have to remember about capital preservation. And if you're starting out as a trader, you're probably going to be starting out in the region of anywhere between $1,000 and $10,000 in your trading account. Now you have to think of an amount of money that you're prepared to lose each and every day. Put a number to it. If you're trading with a $10,000 account, maybe you're prepared to lose $150, $200 every day. So if you've got 2 or 3 trades in the market at any one point, make sure that your exposure doesn't exceed that $200. Okay, this is one of the key rules of trading. If you don't preserve your capital, you're never going to survive. So always think about the amount of money you're prepared to lose, because that is the only thing you can guarantee in the market. You can't guarantee an outcome, but you can guarantee how much you're prepared to lose. So you should never ever be upset, angry with the market when you take a losing trade. It's a bit like a boxer being in a boxing ring and he takes a few hits to the face. Can he get upset at the opponent hitting him? No, that's part of his job. But what he can do is he can then prepare and make sure that he takes as few hits as possible. So let's have a look what happened. So the dollar index, it pulled right down into 96.50, this other significant area here which I highlighted. Now, what was nice about this, we've got two trend lines. We've got this one here, where we can see resistance, 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 breakthrough, becomes support, support, and guess what? Acts as support again. Then we've got this one running from down here, we've got support, support, and all three intersect at the same point. So one of our favorite sayings is we get confidence through confluence. So here we would expect to see some sort of reaction, and we did see that. Now look what happened. The market went straight up into resistance. Now at resistance, we're going to expect the market to pause, make up its mind, and then either break through, as the green arrow is highlighting, or it's probably going to take a breather, pull back, may come back to this trend line, may even test 96.50 again before pushing on. Now as traders, we have to have a clear plan in place. Okay, we are still bullish the dollar index. We are still looking for opportunities to buy dollar up until our fundamental bias changes. So let's have a look at some of the charts we traded and where we went wrong potentially, and where we could be looking at taking new opportunities in the market in the coming days or coming weeks. Now euro dollar, got to be honest, it's not a chart that's really appealing to me at the minute, but areas of interest will be through here and through here. So I'm looking at, I've got a fib, my fib levels drawn in, I've got my structure drawn in, and my structure drawn in here. I am still remaining bearish on this particular market, so I'll be looking at getting short somewhere through here. Definitely be looking at getting short up at around the 114.20 to 114.90 area. Now, if the market doesn't rally up here or doesn't rally up here, then you've got to have a contingency plan in place. Well, contingency plan will be through here, this area here. I'll be looking at selling from here, so a break and close below here. So maybe it might come back down, test the 1.1060 area that we were looking to get short from last week. So it might come back down here, test, have a bounce, come back up into our resistance before selling off. So that's my or Phoenix Blues plans coming into next week. So we're definitely, if it's not next week, it might be the week after. Remember, we don't have to put a definitive time on this. That one thing that we do have to remember is that if we get a break and a close above this area here, then we're probably going to be bullish the euro. Okay, because right now, anything below this 115s, my longer term bias is short. Not just because of technicals, fundamentals as well. We've got monetary policy divergences, we've got good data coming out of the US, we've got poor data in the EU. So in the long term, I definitely want to be thinking short euro dollar. We're also probably going to see they keep calling it the bazooka. Will he bring his bazooka to the table? This is Mario Draghi we're talking about. Who knows? But I know he won't want to be seeing the euro up in these areas here. They're doing easing, and they have been for a while, and now the euro's rallying. So this is something that they won't want to see. Next market, GBPUSD. So anyone that was watching our analysis, and I did tell people if they want to do contrarian trades here, this is going to be an area where we're expecting the market to rally. And it did just that. I mean, when we go through our analysis on this video, guys, you are going to be pretty amazed at how spot on the analysis has been this year. So we're looking for the rally into our zone. We actually took a trade short here at 146.30. We hit our first target, plus 50 pips. The downside was at this point our stops were at break even. We got Mr. Carney speaking, and we always know he likes to drop a bombshell in the market one way or the other. Well, he pretty much did that. We had a full round trip on the GBP, moving 140 points in one direction, then 140 points back in the other direction. And it came back to stop us out at 146.30, only to then decline, and it's finished the week under 145. So we hit that number pretty well, but you've got to ask yourself, is this something I still want to be looking at? And the answer is absolutely. So if I do get a rally back up into 146.30, I will be looking at taking this market short. So I've highlighted here 146.30 to 146.50 is this area here, where I'm going to be looking at taking short opportunities. Now, depending on your style of trading, guys, because I know a lot of the people that are watching this aren't clients of Phoenix Blue, they are just traders that are enjoying our analysis. And if you are enjoying our analysis, please click subscribe and please click like. Don't be afraid. We appreciate your support and thank you for it. So, like I said, we'll be looking for the market to come back into here. Now, depending on your style of trading will depend how you're going to look at executing, whether you're going to drop down to smaller time frames and watch the market cycles change, whether you're just going to have sell limit orders, whether you're going to look at trading from moving averages, whether you're going to trade from pivot points. There's so many different ways of trading, guys, whether you're a pattern trader. I mean, I've traded most of them. In all honesty, I like clear charts, blank charts, no moving averages, clear support, structure lines, and then I like to trade with the fundamentals lining up with the technicals. So what you see is what you get. You don't see much different to what we're showing you here. Obviously, the only difference is when you are one of our members, you understand our entry techniques, our stop management techniques, and our longer term trade signals, like if you were trading from here, trading from here, trading from here, trading from here. Okay, so guys, opportunities 146.30, 146.50, and then going up to the 148s to 149s. We do have longer term downside to this in the region of 135, 136, maybe 137, and you'll see, because when we come and have a look at our commitment of traders report a little bit later in today's session, you'll see why we still believe that there's still some legs left in GBP to go down. Okay, next market, Aussie dollar. Now, the Aussie dollar and the Kiwi dollar both had significant rallies last week on the back of bad US data from Mr. Dudley. Now, on the back of that, on Friday, they actually dropped more significantly than any other market. And when I was doing my analysis again on Thursday morning or Friday morning, I think it was, we have a look at the morning review. If you go through our videos on YouTube, you'll see exactly what I was talking about. On Friday, I stipulated that had it been any other day than non-farm payroll, here at Phoenix Blue, we would have sold GBP and Aussie dollar. I stated it in the videos prior to the market, prior to it happening, and the reason behind it was my initial analysis showed a trend line coming. Let me just show you. It was pretty much through this area here. That's a bit wonky, but somewhere through there, guys. And what happened was it just showed that the market came back up, went straight through it, and I thought, well, this is a little bit strange. And if you actually change the chart to a line chart and take it off a candle chart, what you'll see is that this market actually was a beautiful breakout and retest of a line chart trend line. And it literally touched on the close and then boom, dropped away. Now, how does that affect our trading? For us, it doesn't affect anything. We're still looking at Aussie dollar short, but how are we going to actually trade this? Well, we've got a couple of options available to us under our methodologies. So the first option that we'll be looking at is a close below 0.700 or 7,000, I should say, and then we're looking for a pullback and retest. So we're looking for a break below, so a break below here, close below, pullback, retest, and sell. And if we're going to do that, our target 1 on this particular trade is going to be 50 pips, and our target 2 is going to be 68.50. The other option is, because price is coming into support here, it may bounce and have a rally. And if it does that, our option 2 is we're going to short from 71.35. We're going to have a 40-point stop. Our target is going to be 70.60. So that's best part of 75 pips as a first target. And then our target 2 will be 68.50. Okay, so this is how we're going to look at that particular how we're going to look at the Aussie dollar. Next market is dollar yen. Now remember guys, dollar yen is a risk off, risk on market. So this trades hand in hand correlation with equities. You'll primarily be looking at this in correlation with the S&P 500 or the Dow Jones. Now, what we did do, and you'll have seen it in our videos, we actually bought dollar yen down here at 116.10. Now this was prior to the announcement from the Bank of Japan moving into negative interest rates. Now negative interest rates had the desired reaction that they anticipated, only to see the market rally all the way up to 121.70s and finish the week back where it started, and in fact even lower than where it started. So we've got to ask ourselves, what are the Bank of Japan going to do? Because they're in a bit of a catch-22 situation, and by that, what do I mean? Well, catch-22 is that the Japanese yen is a safe haven, as is gold. So in times of uncertainty, what you have is you get money flow leaving equities or risk assets, and they move from the riskier assets into the safer assets, such as Japanese yen and gold. So we've had the money flow coming back into Japanese yen right now, and we can see that because the market is now back down at 116.80s. So we've got a couple of options here, and our options are, we're going to go long again at 116.10 with stops at 115.70, initial target of 118.40, so that's a 230 point target initially on our first take profit. The next target is going to be 121.70, so that's somewhere up here just below this green box. Now I always like to be the first man out and not be the last man in trying to get out of a trade. Okay, so I'm always the first man out, so I'll never take my trade all the way to the next level. Okay, I want to be out just before. So that's our first trade. And why would we anticipate that this is going to happen here? Well, long here, this correlates with the S&P and the Dow. If the dollar yen closes below 115.85, which is where you see our contingency plan, if it closes below here, what you'll probably see is a big sell-off in equities. Okay, which means you'll probably see the S&P and the Dow close below their major levels. If this happens, then that's probably a market collapse on the cards. Now, I do think one's coming this year personally, and that's what I'm looking to trade for. But I'm prepared to get this one wrong, because when you're right, you get a big catapult like this, and the risk reward is fantastic. So I'm prepared to get this one wrong, on the off chance that the market does collapse and break to the downside. Okay, so that's basically selling yen and hoping that the markets rally and risk on comes back in. Now, if it doesn't come back in and the market closes below and it comes back down, what the Bank of Japan brought in by bringing in negative interest rates has completely been negated. So by the markets falling away and collapsing, money's going back into the Japanese yen, making it stronger. So I'm also anticipating further action from the Bank of Japan. Hence, I'm liking this trade here to go long. I've put target 2 of 121.70. The Bank of Japan have got targets up at 125, 130 for where they want to see the Japanese yen. So I can't imagine that they will sit on the sidelines for too long. So we might see a little bit of an inverse correlation going on between equities and Bank of Japan. Who knows? But I'm going to trade what I see and the information that I have. The next market we're going to look at is dollar CAD. Okay, so this was one of the markets we took a hit on last week. It's never nice to take a hit, but like we say, we're boxers, but just a different field. We're in the markets, so we have to be prepared for taking a few hits. We can't be ring rusty, which is why we need to do our analysis on a weekend. We need to read up what's happening in each economy. We need to know which economy is growing, which economy is expanding, why, Because if we know that, then that gives us a fundamental edge on which markets to be buying. We always want to buy strength and we always want to sell weakness. If you put the two together, you get exponential moves. Buy strength, sell weakness. It's a very, very good place to start when you're a trader. Okay, so Canadian economy not doing very well. Why? Multiple factors. First one is the price of crude oil. Canada's largest export is crude, so therefore, if you've had a reduction in your sale price from $120 a barrel down to $30 a barrel, well, any economy is going to suffer on that. So that's primary reason for Canada. Also, they've also had an increase in unemployment. Okay, so all this is weighing on the Canadian economy. Although you can see with last week's or the last couple of weeks' strength in crude, you can see what happened to the Canadian dollar. It did actually strengthen. But look what's happened. If we look at our market and we look at our fibs, we can see the market came down to the 50%. There's no trade here for me. No trade at this point. But now what we're looking for is we want to see a market, we want to see some strength in this market, i.e. strength in the dollar and weakness in the Canadian. I want to see it come up. I want to see it close above these highs here and then come back, and we'll look to get long through here at the 1.40 area. And we'll look to target 146s again with a long-term target of 1.5 or just below. So here's the S&P. It's very similar. Our stance hasn't changed. We're still looking for shorting opportunities. Now, Mrs. Yellen, she is speaking on Wednesday. This speech I've already mentioned. This is going to be a critical speech where we'll see how the US are going to sort of focus their year plan on rate hikes and what view they have on the economy. So let's have a look and see where we'd be looking at trading this particular market. So 2 weeks ago in the same video, Dissect and Detect, I indicated we'd be potential area to shorting from here, although we actually didn't capitalize on this. We highlighted it as an opportunity, but we didn't ourselves capitalize on it and we didn't trade it. We were actually looking for a bit of a higher push up into this one or into this area here before getting a sell-off. We can see the markets come straight into here. It's sold off quite aggressively, a little bit like the Japanese yen. Dollar yen has sold off significantly. So we're probably going to test these lows again. Yeah, we're going to test these lows. So initially we're going to look at this trend line here, and then ultimately we'll look at a close below here, sort of 1820, 1818. If we get a close below that, that'll be the same as the dollar yen closing below 115.85. Okay, so ways of trading it, same as dollar yen. You could be looking for a long trade from this zone here, taking it up into here. Ultimately, I am bearish the equity markets. I do think they're overvalued, and I am looking for short. So ideally, break close below, come back and retest, and we can sell it off. Oops, let me just go back to gold. Now, this is the gold chart we sent out a couple of weeks ago. Now, what is beautiful about this is you can see what we were looking at and how we entered the market. So this is our analysis from 2 weeks ago. So we entered the market down here. Unfortunately, as the market rallied, we were looking for another entry to add in here. It missed our entry by $2. Okay, so we had an entry at 106.50. It came down to 108.70. Now, look where this market is now. It's up at 11.73. Our initial entry is down at 10.75. Currently, $98 up so far on this trade. Now you can see where our previous entry was here, the one for our add-in here. Well, this week here just missed it by a couple of dollars before having another bullish close, which is a great shame because on that particular trade we'd now be $66 up and we'd have more than negated our losses from last week. Now what's our plans with this particular market? Well, I think you're going to run into some structure troubles at about $11.78 to $1,200. So around that figure, I expect a potential sell-off in gold, and then we'll be looking to add into this particular market. We're going to look to go long around 1150, 1148, 1152, somewhere around there, with stops underneath our zone. First target at 1178, second target 1220. Now, hopefully this is all sinking in why we're looking at long gold. If we're bias is short on equities, we're looking at strength in yen, okay, then obviously you can see how we're looking at risk off and risk on. So if it's risk on, we're buying equities, selling gold, selling yen. If it's risk off, we're buying yen, buying gold, selling equities. General rule of thumb, that is. Okay. Okay, oil. This was our analysis from a couple of weeks ago. Where is oil heading? We said 25 to 20 bucks. Did it get there? No, it didn't. It wasn't far off. But what happened is this bit. This is what I'm trying to highlight. Why? Because this is what we were anticipating, and it's kind of happening, but it's not done it as of yet completely. So we got a pull back into the zone. We got that. So look, this is the chart. So this was the pull back into the zone. We look to get short, but now what you'll see is I'm going to show you something else as well with commitment of traders. Well, we can see this market's pulled up, it's sold off, it's gone up again. But what we're looking at is, before I actually go short again now this market, I want to see a close below this trend line, and I'm going to look. Yes, it's a short-term trend line, and it is a counter-trend trend line. But what I'm looking for is a break, close below. We'll look for a retest or a test of this trend line up here, and we'll look to sell it off. Our fundamentals are still bearish oil. Reason, oversupply, not enough demand. Now, when we come to the commitment of traders report, I'm going to show you a little bit of something on oil which is showing us that the bottom's probably not that far away. Okay, next market. So CAD yen. This is just a little bit of a recap on the analysis that we did 2 weeks ago on this video and where it is currently today. So we stipulated that we were expecting further weakening to the Canadian dollar with oil prices falling and the strength of the Japanese yen with the indexes collapse. Looking for a test of the trend line, this one up here, highlighted, and we'll take it back down into the demand zone all the way down here. Obviously, the first thing it's got to do is close below these two trend lines here. Now, look what happened. The market came straight up into our area of interest, and so far it's sold off best part of 300 pips. Now, everyone that was watching this video should be in this trade, or should have taken some money out of it. We had 104 pips out of it, but then through the volatility got spiked and stopped at break even. It's still a market we should be trading. Okay, we're looking at selling CAD weakness and we're looking at buying yen strength. This market will probably test these lows. Another market I want to show you our analysis on was pound yen. We put this correlates with our GBPUSD analysis, i.e. we were expecting the GBP to move higher, and we were also expecting the yen to sell off a little bit. So look, plus if the global markets sell off, then we will see further JPY strength. Best way to trade this is buy strength and sell weakness. What have I just been saying? So what we looked at was the market to rally up into our zone. Okay, at the time here this is 169.39, and we were looking for it to rally up into the 176s. And I know what everyone's going to be thinking, well, if you thought it was going to rally from 169 up to 176, that's 700 pips, why didn't you trade it long? Well, guys, if you want to trade against what you believe the fundamental biases and technical biases, then absolutely fine. And I've mentioned this numerous times in the videos every day that we do morning updates, or whether it's the long-term analysis. If you want to trade contrarian, then by all means do it, but do it at reduced risk. Don't just trade for trading's sake. Yeah, we have a plan, we stick to it. Our plan is we want to see this market rally and come into here. Here there wasn't a technical reason in our books to trade this long, but this is what we were anticipating to happen. So just because we anticipate it doesn't mean we trade it. Yeah, we want fundamentals and technicals to line up. So this is about being a disciplined trader. Okay, so has anyone read any books to do with being a disciplined trader? Okay, have a look. See what it takes. Do you have the discipline to be a trader? And look what happened. So this is what happened in the last 2 weeks' moves. We got the big bull move up. It came up again. And do you know what, guys? Just missed our entries, which was a great shame. An absolute travesty, really, because it fell from 176 down to 169.40. So we missed huge pips there, and I've only got myself to blame, really. Should have been more active, but unfortunately, you know, sometimes when there's these major news announcements, I've got a great saying, and it goes something like this: I would rather be a pilot on the floor wishing I was in the air than a pilot in the air wishing I was on the floor. So think about that in trading terms. Yeah, I'd rather be a trader sat on the sidelines wishing I was in a trade than a trader sat in a trade wishing I was how the hell to get out of it, or how the hell do I get out of it. Yeah, it's not a nice position to be in. So for me, I'm just happy that the analysis was good. Just because I didn't get into it, not a problem. Next one. Now this one is a little bit different. It's a little bit different purely because fundamentally there's nothing really there. It's just the technicals that I really do like, because this is off a monthly chart on Euro Pound. So we've got a huge significant level through here. I think it's 77.60, 77.60, 77.80 through here. We've actually got a sell limit sat there waiting, with a protective stop just above 78. So we're not far away from that now. But if we actually look at this huge level of support here. Okay, we can see tested once, twice, 3, 4, 5, 6, 7, 8, 9, 10, before we finally got a huge push down. So 10 tests on the monthly candles before a huge surge down. Then it's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months to come back and test that same level. And if we look, there's also this beautiful trend line here that's got 1, 2, 3, 4, break, come back, retest, 6, 7 tests on the monthly chart. So now what we're looking for is just for the market to push up briefly and then come back down. This is a huge risk-reward trade. Okay, we only trade positive risk-reward. We will be taking money out all the way down. But here we've probably got, what's to the lows on this chart? I think on this particular chart you're going to have, what's that, it's about 69 I think. So best part of 900 pips for a 50 pip stock. Yeah, we'll settle for that, 18 to 1 if you were to take it all the way. Yeah, this is nice positive risk-reward trading. Okay, so moving over to the Commitment of Traders report. Now, there's not many people that I know that actually use the Commitment of Traders report in the manner that we use it. This is a very, very effective way of trading the markets, commodities and FX. But you have to realize the importance of what is actually happening within the Commitment of Traders report. So I'm just going to show you the first particular chart we're going to look at. It's crude oil. And the Commitment of Traders report it's a breakdown of 3 entities. One are the commercials, one is the non-commercials, and the other one is non-reportables. It shows you how they are positioned in the market with futures contracts. Now, the non-commercials and the commercials, these are the only two of any interest to us at Phoenix Blue. Non-reportables, forget them, they are always wrong. So how do we use this information to our benefit? So the easiest way to think about it is a non-commercial will be somebody like an investment bank, a private equity fund, a hedge fund, and they actually use the market to speculate. They use it to make a return, whether it's for themselves or for their clients. A commercial is an international organization that uses the market to facilitate business. They're usually hedging to protect future profits or guarantee future gains, okay, in their business, not in the market. Okay, so the cheaper a currency gets, or the cheaper a commodity gets, a commercial will buy more and more of it because they can then lock in future gains, whether they're buying, if they're cheap, for example, if sterling is getting cheaper and a US organization wants to buy either a company in the UK or wants to buy a piece of land or whatever, or buy labor, and sterling is getting cheaper, they will buy more and more of it because it makes that their acquisition or their labor costs become cheaper. Does that make sense? Okay, if you're someone like Nestle, the cheaper sugar gets and the more you buy of it, well then the more profit you have in your end produce. Okay, but you're probably going to be paying more for something else. So this is how organizations or commercials use the market. Yeah, they're always looking to guarantee a future price so that they know where they are. So when it comes to crude oil, so we're looking at crude oil. And what we have on the chart here is we've got a weekly chart of the futures price up here. Then down here we have, you can see a 36-month, so this means we look back 3 years at, it's called the commercial index. Well, when the market gets to, or when the index gets to 100, this is saying that we want to be looking for an end of trend. Okay, we want to be looking at potentially buying this market. So if we look, the commercials, or the market has been selling off very, very aggressively from above $100. And right up here, the commercials were at 0, so this was a sell signal. Okay, look what happened. No one envisaged that the market was going to move like this, but as the market moves down, look what the commercials do. They buy more and more and more and more and more. Okay, or this is the index highlighting that. Now down here, this green line, this is the commercials long contracts. So when we can see up here, okay, we can see that as the market was rallying up here, the commercials were selling. Okay, as the market sells off, the commercials were buying, but then from about January 15, the commercials haven't really bought or sold. Their contracts have stayed roughly around the 600,000 barrier. Okay, the number of contracts that they hold long. Now, the reason I've put this yellow line in here is because this is the biggest sort of surge we've seen in the commercials buying this last couple of weeks. Now, if we get another surge in commercial buying, we'll probably see that this market might actually break through this trend line that I've drawn. Now, in all honesty, my and Phoenix Blue's analysis is we're still bearish the oil market due to supply and demand. However, if we do start to see a surge in buying and we see the commercials really ramp this through, what we'll probably see is we'll probably see a break of this trend line, and then we'll see a break of $40. What I envisage, or what we're looking for, is right now there's a shorter term trend line here, which we can see this is testing. You've seen it in our analysis. Probably see if it can still carry on selling off. As the market sells off, what are the commercials going to do? Well, they're actually going to keep buying because it's getting cheaper. So as the market sells off, the commercials are going to buy more. When we get in and around these numbers here, if we do, I would very, very much like to say that we're probably going to have seen the bottom on oil. So any breakthrough 600,000 contracts long, providing the short contracts aren't increasing at the same rate, what I will look to see is a change in cyclicity, and we'll be looking to take this market long. Okay, next market that is of real interest to us right now, and this is of interest, is cocoa. So again, with the commodities, this particular index, we're looking at it on a 6-month cycle. So we're looking at it on a 6-month look back. Areas of interest are when I've only highlighted the buying signals for now because we're only potentially interested in buying this market. I'm not showing you the sell signals because there's no point right now. So this yellow line down here, the horizontal, indicates where the commercials were extreme long, i.e. meaning that they hold their most amount of contracts long, or I should say their net position is at their highest, which is their long contracts subtracted by their short contracts, gives a net position. When this is at 100, this is saying that their net position is at the highest looking back 6 months. Now, let's have a look, see what happens when the commercials are here. So we can see that market got a nice rally. Market rallied lovely and kept going. Again here, market rallied lovely. Again here, the market rallied. A nice rally, really nice rally. And look here, pretty much where we are now. And this is somewhere where I want to be looking to get long. Why? Well, let's look at the contracts. Well, we're up over 100,000 contracts. We're up over 100,000 contracts here, but we didn't quite have the extreme we're looking for, and we got a nice push off. Over here, again, above 100,000 contracts, nice rally. Now, what else can we tie in? We've got nice buying pressure from the commercials, continued buying pressure because the market's been selling. We've had nice buying pressure. Now look at the support level we're at. So we can see it's tested not once, twice, 3 times, 4 times, 5, 6, 7. Now, look at the candle action as well. So if we wanted to trade this off a weekly candle, a break above last week's high, targeting 30, 250, 33, lovely trade, great risk reward, is on the cards. I will, however, be looking to take an aggressive entry through here on a smaller time frame, taking it first targets up to 3,000. You can see nice structure through there, and then longer term target of 3,250. So cocoa is right up on the watch list, guys. Make sure you are watching this one. Then we've got rice. Okay, so rice again, if we look, very, very similar. Look at the buy signals. Now, we can see that the green line down here, this is the long contracts. Now, the red line, this is the short contracts, and the blue line is a net position. So, what is of interest to me? When we have an extreme, I want to see that the commercials are buying. So we can see that they're buying. The green line has been rallying quite nicely. Also, we can see that the short contracts have started selling off this last few weeks. So, what would be my plan of action here? How could I look at potentially going along this market? Well, potentially I would like a sell-off to get in on these lows here, or I'm going to look for this channel to be broken and then pull back, retest to go long and take it up into around the 13 barrier. We're looking at GBP. Okay, so this was the analysis we sent out on the 23rd of Jan in the same video. 23rd of Jan. Look, highlighted, we're looking for it to push up. We can see where we're looking for the long contracts to push up into. Then we're expecting a sell-off. This is where we're at now. Exactly the same charts. So we can see that the market rallied into our 2015 lows that we wanted it to. We can see the net position, or the commercial index, isn't quite at the 36-month. This is where the market tends to turn. So if we look at the commercial index, when it's at the 36-month here, these were the lows at 1.5s before rallying up to 1.70s. And then here, 36-month extreme again, it went from 1.7s. Now, here was an extreme, but it was only an 18-month. So I'm expecting this market to come a little bit further to tie in with a 36-month extreme. We can see the buying contracts, the long contracts, okay, have increased significantly this last few weeks. We're somewhere up near the 2013 lows where we got our last 36-month extreme. So I envisage and I'm expecting that this market is going to push lower. We're going to see the long contracts come a little bit higher, and we're going to be looking at shorting again, sterling and taking this one down, as I say, into the mid to late 1.3s. I think we've got further to go looking at the COT index and looking at the commercial long contracts. Okay, this market is increasing in size because they're adding short contracts as well. We look at the net position extreme, needs to rally quite a bit. Yeah, I should have highlighted this one in here before we get somewhere through there. Okay guys, so that is our Dissect and Detect video for the 7th of February. We've got a lot of information in there for you to go through. Now, I haven't covered every single chart. I've covered the charts of interest. If you have questions about any other charts, if it's Aussie CAD, Aussie Kiwi, I don't mind. Please email in, drop us an email with a screenshot and your question, and we'll look to get back to you as soon as possible. If you've got interest in coming to learn with Phoenix Blue or trade with us, please drop me an email at Phoenix Blue. Follow us on Instagram at Phoenix Blue Trading or Facebook at Phoenix Blue Trading. Our website will be live very shortly. Just a few technical issues before we get that up and running. So guys and traders, please enjoy your weekend, and we look forward to speaking to you throughout the week. We've got the morning update being uploaded tomorrow morning as well, which will just be a brief overview of what's happened throughout the Asian session and if there's any opportunities to trade through Monday. So enjoy your Sunday and look forward to seeing you next week. Bye bye.